the MarketWatch Best New Ideas in Money Festival? Yeah, exactly. All right, well, we want to close out the day with a bang. I'm Coram, I'm multimedia content editor at IBD, and joining me to talk about how to read the signs and find some of the next big market winners, we have Chris Gessel, IBD's Chief Content Officer. We also have Harold Morris, Senior Product Coach at MarketSmith. So guys, let's dive right in. Big winning stocks, they share a lot of the same traits. So we can look at history, apply that to today, and that's what we're going to be digging into in this session. So Chris, what do you think are some of the biggest keys to finding big winners?
Well, one thing that I really focus on is outperformance. And usually the biggest winners, even in a bear market, will start outperforming the market. And that's one of the biggest signs that you may be looking at a future leader.
Yeah, exactly, because if as active investors we're picking stocks and not just buying the index, we want to be outperforming the S&P, right? Or whatever index that we are tracking. So that outperformance, very key. Harold, what would you say for you is the biggest thing? I mean, we do have some slides up here. You have the fundamentals, the big earnings and sales growth, that outperformance. What else should we be keeping an eye on?
Well, Chris mentioned it, but one of the things I like to do is study past winners. You know, we know that things tend to repeat themselves, so winners in the past will give you some clues as to what to be looking for in today's market.
Exactly, and we also know that some of the biggest winners throughout history, we know some of their names, right? And we'll be talking about some of them today, like Qualcomm, Apple, Chipotle. I mean, these are household names, and they're all innovators in their respective industry groups. So more on that to come. Also, just one quick note. Some investors really focus on the price of a stock, but the big winners, they're not usually cheap stocks, right?
No, and yeah, if you're looking for low PE ratios, you are going to miss most of all the big winners in history.
Yeah.
It's just the way the market works.
Exactly. All right, well, moving on, let's take a look at our first model book stock so we can learn what to spot in the next crop of big winners. So Block, ticker square here, SQ. The big run that we want to focus on started in 2017. Get this, you guys, up 600% in just about 20 months, so less than 2 years. That's a huge move. And so investors who were on top of this stock could have made life-changing money here. And talking about that fundamental side, earnings growth here, leading up to the kickoff of this big move in 2017, earnings growth on a quarterly basis of 122%, followed by 106%, then 225%. And here's another look at that move on a monthly chart here. Now, Chris, talk about the beginning here of when we saw this IPO. It took a little while for Square, or Block now, to get going.
And that's actually very common. A lot of people say, oh, I want to buy this IPO on the IPO day. Usually isn't a good time to buy. It often takes months, sometimes years, for an IPO to really set up and make a big move. And I think it was almost a year and a half or so before Square really started to move.
Mm-hmm. Yeah, I mean, we saw that with Facebook, right?
Mm-hmm.
That was another really big example there. It took over a year for it to get back to the same levels it was trading on that first IPO day. All right, let's also zoom in here. So this is the kickoff of that move in 2017, Harold. We saw a big gap up on that quarterly report that showed that huge triple-digit earnings growth.
Right, so that stock gapped up on earnings. And the good thing about it, it maintained that gap up. If you look, it gapped up, traded sideways for probably a couple weeks, but you look at the internals of that base that it formed right there, it just went sideways, found support at the 21-day exponential, eventually found support at the 50-day moving average. That's the red line on the chart. And then it proceeded to break out from there. So if you had bought it on the breakout, then you would have been looking at those moving averages to make a decision as to what you want to do with that stock.
Exactly. So, in strong markets, we do really like looking at these earnings gaps, and we pay attention to where these stocks are closing, how the volume's looking at. Harold, another signal, as we mentioned, is that relative strength line.
Exactly. So that's that outperformance that Chris just mentioned a moment ago. That relative strength line on our charts, it's a ratio versus the S&P 500. So when that line is in an uptrend, that's telling you that that stock is outperforming the S&P 500.
Yeah.
And we like to see that, that uptrend right at the breakout.
That we do, yeah. You can, there's a lot of ways to screen for relative strength too. So that's something that we love to see. Let's zoom back out here. So this first arrow on the chart, if you're following along with us, that is that earnings gap that we saw. So here's the move. But Chris, you know, there's a time and a place to be in a big winner. We don't just want to hold it forever because it's not going to go up forever.
Right, and so you want to be following it, making sure that it's not triggering any sell signals. And actually, this one did have kind of a halfway sell signal halfway through the run. It had a little bit of a climax run, and usually when stocks get too hot, that's the time to sell them. But this was a little early in the run, and so some people sold into it, and then they bought it back. If you held it, it worked out fine. But you can see there at the top, it broke the 50-day, or was it the 200-day moving average?
Yeah, the 10-week line, sort of, you know, the sister there of the 50-day on the daily
Right.
chart, since this is a weekly chart here. But yeah, that climactic-like action. Maybe we can get into this on IBD Live tomorrow. But trading around a position, right?
Right.
You don't have to sell it all. Maybe once you do have a huge profit cushion, maybe you don't want to sell out completely, but sell some into strength, buy back at another proper buy point. And that break of the 10-week line did come in heavy volume. So that throughout history, we've seen many examples. We'll show a couple more here soon that showed these patterns continue to show themselves, the breakouts and then the sell signals.
Yeah,
Go
and
ahead.
one last thing is that, so this stock went sideways for almost 2 years, and during that time, it had a 70% correction before it started making new highs again. And that's why a lot of growth leaders, you should be trading them. They should not be buy and hold forever type stocks, because they have their day in the sun, sometimes years in the sun, but when it's done,
You got to know when to.
and 70% is not unusual. That's around the average that most of these stocks pull back after they top.
Yeah, I mean, I don't want to give back 70% of my profits, right? So we'll keep an eye out for those signals. Okay, another model book stock example is Tesla, and this had 2 great moves, guys. In 2019, the pandemic got in the way a little bit, but then another big move in 2020. That 2020 move, by the way, up over 1,000% in 14 months. And I know you guys got a piece or pieces of that. And tying this back to the fundamentals, because fundamentals and technicals really go hand in hand to improve your odds of success. Early 2020, that's when Tesla's profitability really started improving and ramping up after a string of losses and splotchy bottom line growth. So let's take a look at this in a little bit more detail here. Harold, let's have you talk about the 2019 move. Perhaps the initial entry here a little more unconventional, but maybe we're starting to see stocks now that could have moves like this with a big move above a declining 40-week line. What do you think?
All right, so Tesla didn't have your ideal chart pattern, but it did start to show the fundamentals that we like to see. Unfortunately, I missed a move in 2019, but I kept it on my radar, so I was prepared for the stock. When it did finally base, when COVID did cause a lot of stocks to correct, and got into it, I believe it was June 1st of 2020. Yeah.
Yeah, so we'll take a look at that. Before we do, just one more note on this chart. I mean, look at how many blue weeks up in a row. You really start to see that angle of ascent there. As you were talking about a little earlier with Square, sort of climactic action,
Right.
but a little too early in the move. So we didn't completely forget about this one when COVID happened. Here's a closer look at that 2019 gap up. So a potential entry there, then the climactic-like action. If you wanted to trade around this position, maybe sell some into strength, and then use some of those moving averages to continue to scale out, like a close below the 21-day line. I know, Chris, that's something you like to do.
Yeah, definitely. This is something where you could have taken off a third or even more when it was going vertical.
Yeah.
I've also bought puts against stocks like this, and that can work very well.
Yeah, and we just had a conversation on options, so there you go. The conversation continues here, and then we mostly moved to cash during COVID, but look at this 2020 run from Tesla, again, up over 1,000%. Let's take a little bit of a closer look, Chris, at some of the buy points here for Tesla and several opportunities to accumulate shares in the early stages of this 1,000% move.
Right, so it gapped up and had some volume, and that was a real low risk entry, especially because it had been going sideways for a couple weeks and very tight.
Yeah, really tight, right?
Yeah. And then over the next month, there were 2 more areas where you could have added to your position. Then it ran up and started to base again, and then as it was coming out of that base, beginning the gap, that was another place where you could have added to your position. So this is an example, and we know people who went crazy with this and had incredible years because of Tesla, where they were adding it every chance they could, and just
life-changing money, you know. And this is the kind of stuff that we're looking for. The market, you know, bear markets are no fun, but I think you all being here today and you know, all of us collectively together studying up, this is the kind of stuff that we're looking for and we're looking forward to. So could be right around the corner. We'll have to see, but we'll be ready for it. And then here's, as we progress later on in the move, because I mean, this is a 1,000-point move, right? So even more opportunities to get into this one. And then, but let's ultimately talk about the climactic action that I remember us discussing in real time on IBD Live as it was happening.
Right, so climax runs are often the way a big leader will top. And so we were seeing it, and then it gapped up after running up a number of days in a row, and that is usually one of the final, sell signals, at least into strength. And so, as you said, we were talking about it in real time as it was happening. I started selling my position at that point. So that was the first place to start exiting, and then about a month later in February, it went below the 50-day, and on the weekly closed below the 10-week moving average. And after such a huge move, so this thing had been running 2 years, up more than 1,000%, and now it's closing convincingly below the 10-week moving average. That is a very solid sell signal.
Yeah, and I mean, Tesla's trading roughly around that same level now. I mean, you could have maybe had a shorter term move in this other breakout here, but again, goes back to that point. Why just sit with something, even a stock like Tesla that has that story element in spades? Maybe your money might be better off elsewhere. Take those profits into strength. Go ahead.
Well, because even the biggest winners, they need time to rest and set up again.
Exactly, like you're on a hike, right? You're climbing a mountain.
Right.
I don't know. Maybe there's some extra fit people who don't need to pause and take a rest. But yeah, I know all of us do. We need a little pause. So, and it's not just Square and Tesla. Throughout history, there are so many other examples, and I know that really informs our perspective and how we approach the market. So here are some other examples for you all. Harold, let's take a look at Cisco, a huge winner, the biggest winner in the 1990s. Look at this. We're not even going to go to a weekly chart because the whole move won't fit on a weekly chart. We have to look at this a monthly chart here. Okay. So huge move from Cisco.
Yeah, and again, this stock based quite a while before it made its big move. But if you look at the weekly chart, one of the things you'll notice.
This is a monthly.
I know, but if you look at different segments of the 90s, one of the things you'll notice is that Cisco, it rolled that 10-week moving average all the way up. So it'd make a move to the upside, come down to the 10-week, make another move, and it did that over and over again.
Yeah, so, instead of falling through the 10-week, which is a sell signal.
Right.
So found support there. And so here's a look at the early buy signal and the move up. Let's also talk about this black line that we have on the chart here, because this is an upper channel line, and it's something that the team really likes to utilize as another climax or topping signal to be able to sell into strength.
Right, because we all know that nothing is going to go up forever. So you have to have some type of exit strategy. Using trend lines is what we like to use. So you can do a lower trend line. In this case, the upper trend line worked. And once the stock broke above that upper trend line, right there where that second arrow is, that was a sign that, okay, maybe you should start taking some money off the table. Doesn't mean that you sell the entire position, but take some off the table, lock in some profits, especially if you bought it right, down at that first arrow down the lower left, or even, down when that trend line, when the trend line first started. If you got up that high, that stock is not going to keep going. So,
Yeah.
What's the old expression? Bulls and bears make money, but pigs get slaughtered.
Yeah, there you go.
That trend line keeps you from being a pig.
Exactly, got to stay disciplined there. All right, and with these trend lines, I mean, the more dots you can connect, the more points you can connect, the
more
better.
accurate it is, yeah.
So that's another good note there. All right, moving on, and we'll pick up the pace here a little bit. Chris, eBay, once upon a time, was an ultra hot stock here. So there's a look at the move in 2003, 2004. And here's a weekly chart showing that buy, and then that sell signal, very clear, that marked that the run was over. And would love your comments on that. And then also to put it in perspective of so many of the winning stocks that we saw in 2020 also had these similar sell signals. And we could rely on history to show us, hey, maybe they're not going to come back. Maybe we need to step aside.
Right. Well, so this is very classic. The market, was in a correction. It was already starting to show strength. Then it broke out. It ran up 200% in about 2 years, or maybe a year and a half. And then it broke that moving average in big volume. And basically, its era of outperformance was done. And in fact, since that point, it has not outperformed the S&P in 18 years.
Yeah, so that relative strength is something that we continue to key off of. Apple heralds, I'm sure a couple of people at least, I would assume, either have Apple in their portfolio or maybe have owned it at one time. And man, what a run this stock had in the mid-2000s. So a very impressive move here. Let's have you talk about some of the buy and sell signals for that impressive run.
Well, first off, it's not the chart that's going to cause that price move. There's a story behind it. So Apple, we all know, back in the early 2000s, they came out with the iPod, and that was something that was brand new. So because of that, it had the fundamentals that we like to see, and then of course the chart pattern was a great setup. So Apple had broke out. You see that first arrow there, broke out of a nice, I think that was a flat base at that time, made a run up, and here's another stock that continued to ride that 10-week moving average on the way up.
All right, and quickly running through, we also have Booking Holdings. This was another one in the late 2004-08. Similar story here. Early buy signal, you got that relative strength line, and look at the sell signal. Chipotle Mexican Grill, similar story here. An impressive move, really outperforming the market, but a time and a place to be in this one as well. Very clear sell signal. Are you seeing a theme here? Can you guys spot the sell signal if I removed the arrow there? All right, well, let's also take a look and apply some of this knowledge now, guys, and look at some of the current leaders for your radar. So now I'm going to go on over to some live charts. And I have Shockwave pulled up here, so we'll start with this one. And Chris, let's go to you. What makes Shockwave one of these potential big winners of the next market cycle?
Well, the market has been going down a lot.
And Shockwave's been going up.
Shockwave's going up, so you see the RS line hitting a high. And then you look at the earnings, those are incredibly strong. It's a medical company and is got some real innovative ways to treat different conditions. And so this is the type of thing that we really pay attention to, because when you're seeing these sorts of numbers in this sort of market and the stock acting this way, it tells you it could go a whole lot higher.
Yeah, so maybe it's working on a new base now. Do we need to see it touch that 50-day or 10-week line to be getting in if we haven't already gotten in? I mean, we talked about earnings gaps. This one had a very strong move on its earnings report. Potentially actionable. You do have that big cloud of the bear market hanging over. But what do you think about a potential buying opportunity down the road?
Oh, absolutely. I mean, all these stocks offer multiple buying opportunities. Don't chase them when they're extended. You're going to get shaken out because all of a sudden you could be down 20 or 30%. There's nothing wrong with the stock, but then it starts playing with your mind, and you'll sell. So just wait for the right entry.
Yes. All right, Harold, let's have you take a look at InPhase ENPH. Briefly talked about this one too on IBD Live this morning. So one of the standouts in the solar group, but once again, a similar story, a very strong positive reaction to their earnings report not all too long ago, and it is resisting the market downdraft in a big way right now.
Absolutely. In fact, that chart looks a lot like Shockwave.
Only better.
Yeah, but again, there was a story behind that move there. But so if you're in the stock, you're in good shape. If you're looking for potential buy, this is something that you want to have on your watch list because it is setting up. If you have time, take a look at that weekly chart. This is one that is setting up very nicely. I've got a sharp eye on my watch list. Got some alerts set, so I want to position myself for a move to the upside.
And one last one, because we can't help ourselves, and that is Celsius energy drink. Anyone out there, have you tried a Celsius yet? I haven't. I still need to try it. Well, it looks like by the audience, they have a bigger market share to gain. So maybe it is in the early stages of its growth. And Chris, I know you don't really do sugar, but this is the fake sugar. I don't know, jury's still out, but I know it is increasing its popularity. But anyway, back to the chart. That was a little on the story. We're seeing huge triple-digit growth, and it seems like maybe more market share to be had. But another stock that has seen a very impressive move in this bear market.
And another one to be on your watch list and waiting for it to base out and offer a new buy point.
All right, CELH. InPhase, Shockwave. All right, let's just go to a quick recap here for everyone. Big winning stocks, they share a lot of the same traits. You got that big earnings and sales growth. They're outperforming the market before they begin their huge moves. How do we spot that outperformance? That relative strength line, easy way to do that. The stock prices here of these big winners are typically not cheap at the beginning of their big moves, so be careful about focusing on PE ratios, and also big winners, they're leading innovators in their industry groups. So guys, let's talk briefly as we wrap about some of the keys to success here with some of these big winners. And Chris, this is something that you mentioned. You got to look for a proper entry before buying. You definitely don't want to chase. We also talked about not blindly holding big winners, right? We want to preserve our profits.
And we've talked about it before, and some of these stocks have already shown this, but they will fall 70, 80% from their peak, and actually only a small percentage ever come back. We remember the ones that are with us, but if you go back to like the late 90s, there were hundreds of stocks that they're gone and forgotten.
Yeah. Exactly. So again, there's a time and a place. And Harold, you've been great to point out throughout this session about how important that company story is. And often it's the technicals that start breaking down or give you those sell signals before the company fundamentals start to change. Maybe you do start seeing that slowing earnings growth or some of those other signals. But what are your thoughts on that?
Well, typically these stocks that are the big winners, they have accelerating earnings, accelerating sales. So that's your key, your clue that, okay, this stock could possibly be a winner in the next market cycle. No guarantee, but that's something you want to look for in addition to the setup there. And I think the most important item on that list you see there is the third point. Follow your sell rules, preserve profits.
Yeah. Exactly, because it comes down to the timing, right? Say there is a big winner, but you get in it at the wrong time. You don't want to be sitting on a 30% loss. And like you said, then there's all this psychology that goes with that if your timing is off.
Right. You want to be buying on a pullback, a breakout, not buying it extended, and just so you can withstand the pullbacks and the volatility that are going to hit.
Yeah, naturally going to happen. If you're going to hold for 1,000% move, there's going to be some wiggles and wobbles.
Yeah, right.
All right, well, there will be more to discuss tomorrow morning on IBD Live, and so we hope you all join us. We'll see you there tomorrow morning at 9:30 a.m. for 90 minutes of fun And thank you all so much for joining us. We don't really have time for questions. I don't know if someone's going to start yanking us off the stage, but maybe we could take a question or two if someone still has time and an interest. Looks like we covered it all. We were so in depth here with our conversation. Thank you all once again for joining us. Hope you had a great day at the conference.
All right.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.